Alrighty, what is good? I hope everybody is doing well. It is currently December 2nd. I'm going to do a market review and kind of talk about a couple things in regards to zones. And then if you follow me on Twitter, you've seen the buy stop, sell stop stuff, and I'm going to touch on that too today. But this is just going to be the market review today. Like I said, what I was going to talk about, well, there's a couple little nuances I kind of want to discuss from that aspect. But first things first, I want to talk about the trade from this morning. And it kind of goes hand in hand with a couple of requirements I have for the buy stop, sell stop stuff. So immediately coming into the morning, right, if we go up to, I believe it was a 15-minute chart. Yes, this is about as picture perfect as a setup as you can get, in my opinion, especially in pre-market. I usually try and refrain from trading pre-market, especially on a Monday. Just not a fan of it. Usually in most cases, it's not the highest probable environment. Obviously, any scenario, it's not really based on that. Because the market moves the same every day, right? But from that aspect, I just personally am not a fan of it, except when the market is moving extremely clean, and that's what it was doing this morning, right? So if we look at this right here, right, you can see we put this high in over here, right? If we just zoom out, just basic market structure, right? Low, high, right? We kind of see a consolidated phase. We're tapping these unmitigated candles, right? And we close up above this on the 15-minute chart. So immediately once I see that, I'm expecting higher prices, and I don't want to fade that, right? I don't want to trade against or trade with weak structure. I want to trade with strong structure, and that's a very, very important aspect that you need to note, and you need to just write down every day. Just ask yourself, are you trading with strong structure or are you trading with weak structure? If you're trading with weak structure, don't place a trade. It's not as high probable. Simple as that. If you don't know how to identify that, then backtest. Simply put, right? So if we look at this, right, we close up above, right? We have this unmitigated candle, right? We have this SNDR, last down move before the close up. This area is responsible for that break. So if we go down to the 1 minute chart, what do we see over here? Right? And I'm going to talk about too how to use, because if you look at my previous videos like CSS validation and stuff like that, I need to talk about a couple little things in regards to that. Some very, very important stuff in my opinion. But, right, this is that previous label, right? That previous area that we noted, right? The last down move before the close up. Intermediate structure wise, obviously we could get really, really nitpicky and accurate if we want to take a quick scalp off this last down close candle before that close up above. But I'm not here to do that, right? This is just simple little stuff that is not too hard to see, right? So like I said, this area is highlighted. Right here, last down move, this is usually going to be a super sensitive area. I usually do not see a very deep mitigation on these areas. Usually it's about the 30%, which is perfectly fine. Sometimes we'll come down and tap the 50, but more times than not, I would personally say that we don't come down and tap the 50 off of these areas. They are just extremely sensitive, and I'm more so using them as a POI. I'm not just taking a blind limit on the 50 just based on the SNDR, right? Not how I trade. So now looking at this, you're probably looking like, what is this, all this stuff over here? Let me delete this actually. So this is the buy stop. That's what today was. It was a buy stop trade, and it was really, really, really simple. Like I said a moment ago, and if we go back up to the 5 minute, I'm going to do this really quick. If we go back up to the 5 minute, what do we see right here, right? We see a beautiful 5 minute CSS. Why is it a CSS? We see a close below this low over here. So last break of structure candle, then we close up above, right? That's how I'm validating my CSS right there. Boom, and all I'm simply doing, all this is right here is buy stop entry. What do we see? It's just this high right here down to this swing low, not this low over here, the prominent low. Remember, CSS, candlestick structure, right? So we close up above that. Now, immediately once I see that, let me go back, right? So this kind of goes in par with what I was talking about a moment ago, kind of one of the requirements I require. I'm just going to say all three, and then we'll talk about them later. So I either want to sweep, a failure swing, which is this case, or pair with a break of structure, right? Just closing above like an intermediate high, right? So this one for me would be a failure swing, right? We failed to go take this low over here. We didn't close back within the range. If we did, I would have expected a deeper mitigation, but this one specifically, no. How do I know it's a failure swing? This impulse right here, right? We close up above this. This is signifying to me, that the market is going to want to try and put in a new high, which is simply right up here. That's why I have this labeled draw right up here. So once that's been identified, right, we can have our areas. And if I go back over to this, what do we see? I don't know why I'm just sniffing all of a sudden. Makes no sense. But what do we see right here, right? This is still anchored off of that 5 minute, which I believe was this candle over here, the 745. I am CST, by the way. So that was at 745 candle. Yeah, 745. So you can see strong impulses leaving a lot of imbalances below. We actually do have a wickless candle down here, which is important to note. But as simple as it is right here, right? All I'm waiting for on these buy and sell stops and entries is at least a 30% mitigation. Once that happens, I am placing a buy stop right here, right? Why did that place that so big? Placing a buy stop there, and I am putting my stop below this low. So there's two things you can do here. You could get really aggressive with your trail, which in most cases it pans out perfectly fine, or you can play the safer bet and just keep it at this low and then kind of trail accordingly to however or whatever the target you're wanting to take, right? So two things, right? You can put your stop at this low down here at the 750 candle, or once you get tagged in, you can put it at the low that's formed in there. Let me go back over and drag this back into the spot right there. You can put it at this low down here. So that would have boosted it up to 3.67 R versus what it was down here, 2.2. Both perfectly fine. And this right here is the -1 standard deviation off of that CSS. This is usually going to be a sensitive area. Sometimes you'll see, I mean, if you look right here, right, price climbs up, confirms it, right? We come up, tap it, boom, revert back to origin, right? This down close candle down here. Trade up above, close up above. Once we close up above the -1, usually that's going to be a support area that's going to send price higher. That's a perfect example right here of what I mean by that. And you can also use that as your 1-to-1 off of this, right? Your 1 to 1.67 or your 1-to-1. Simply put, super, super, super simple. And this is just really important in my opinion. You're going to get, I would say, the best trades off of prominent POIs, right? SNDRs, right? Unmitigated wicks, higher time frame zones. Remember, bigger the zone, the higher the likely. Just simple things like that. So let's go up. Let me go back up to the 5-minute. Okay, let's go up here. Yeah. Okay. This is kind of another almost really, really good example. We have a higher time frame high. We close up above over here. We have this unmitigated candle that came off of this imbalance, so it's going to be a sensitive area. And if we look at this, price taps back into it, starts to trade a little bit higher. That area that it left behind that mitigated this candle right over here, right? If we get on to the 1-minute, is actually a really, really good structural point right here. And this is just a basic zone play. Nothing too crazy. Let me go back up to the 5 real quick, actually. Yeah, this is just a zone play right here. But this was definitely an area that I would have taken a trade from personally if I was not already done with this. And that's kind of how these are going to go with these specifically. Kind of these examples I'm talking about. I'll say if I took them or not, or if it's something I would have taken had I not taken like a prior trade or something like that, for example. So kind of two things I want to talk about, standard deviation stuff. I do use this all the time, CSS projection. If you go look at previous videos, you'll see exactly what I'm talking about, right? Those are very, very, very good. Super, super good in terms of targets or kind of expecting or anticipating how deep of the retracement is likely. And I would say a good rule of thumb is whatever your validation time frame you're using, right? Use that as your projection, either if you're waiting for a mitigation back into the area or a target outside of it. So for example, say this was a 5-minute CSS right here, right? What would I be doing? I would be using this projection right here. And I know this is going to be a lower time frame CSS more than likely. Fib projection right here, right? Look at this. What was, oh, look at that. Look how beautiful that is, right? Boom. Was that high a day? Oh yeah, it was high a day. Would you look at that right here? 21,259, and I'm charting on micro, MQ. I kind of like charting on it more. I don't know why. But so we have that noted, and you'll see this one down here, right? And like I said, this is just a normal zone play. This is just a clean area. The thing that would have made it high likely for me, because usually I'm not trying to engage with the ones that are just immediate close up above and immediate reprice. Not, in my opinion, the highest probable. Those usually kind of sway me away because sometimes price will just knife through it, and that would be like a flip or something, right? But when we see a really nice consolidated phase resting right up here, that's when I'm anticipating a really good quality zone play to form, taking it up to the new high, right? Because at the end of the day, all this is right here. We have a range established. We have a deviation from the range down here, right? And then we're going to get our distribution phase higher. That's, I would say, in regards to zones, that's probably my favorite thing to see. And you can see we get that nice tap right here, and this goes up and puts in a new high, right? You could even take a buy stop off this if you really wanted. So looking at this CSS projection right here, what do we see? Right, if we go back up to the 5, let's look at this right here, right? The highest prominent area, what do we see, right? We see a close up above, recent break of structure candle, close below on this candle right here, this 950 candle, right? We can get a CSS projection off of that, and usually when I'm trading with the trend, I am not wanting to see it surpass this -1 and -1.5. If it does, then I'm going to be cooked, right? That's not something I wanted to see. Usually when you're pro trending, you get a CSS projection that is against the trend. It's going to hit this -1 and -1.5, bounce off of that and get a continuation higher, putting in new highs, right? Simply put, this is just a really, really nice example of what I would favor to see off just a pure zone play, right? So now, just kind of looking off the top of my head right here, as we're trading up higher, we actually do get a 5-minute CSS, recent break structure candle, close up above, have our imbalance. We have a really nice fractal in here. This is what I'm talking about. Probably should have highlighted it before I started yapping. It doesn't look like we got a third or a 50% mitigation, but this would have been actually a really, really good play for a buy stop. Now that looks like it. I say that, let me pull this out real quick. Right here, you'll see what I'm talking about. Buy stop, yeah, we tapped that 30. This goes up, boom, boom, boom. That would have been a really nice trade. Very, very nice. And if we kind of go hand in hand, let's get a CSS projection off that for the heck of it. I'm curious. Yep, right there. Boom, 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 boom. And we had that -2 that was just chilling right up above that -1.5. Very nice, very nice. So now this next one over here, I'm going to delete these so they're kind of off my charts right here. So if we look up here, this area right here, this is kind of what I'm talking about. Now this wouldn't be specific for a CSS trade. This is more so zone because it's a perfect alignment on lower time frame. You'll see that here in a moment. But you can see recent break of structure candle right here, close below, close up above. This is one of my other favorite signatures to see, because this is how you know they line up with the lower time frame zone, is when we have your validated time frame, right? Your higher time frame one for your validation for your CSS. When we get a high put in and we close up above it, you automatically know that that is going to be a high quality zone on a lower time frame, right? Simple, simple, simple. And at that same point, if I go down to the 1 minute chart, what do we kind of see here, right? We see a trend line accumulation right here, right? So you can expect a sharper move. That will give you that rebalance. Now, and gives us our delivery, that basic 101, right? Simple, simple, simple stuff. Now, this would have been, in my opinion, probably a little bit more favorable because we were just pumping in the morning. I would not have been extremely convinced on this one right here. Even though it is a good setup, we are in a pretty big premium, and that's not something I would really want to put a lot of risk on the table. I probably would have been looking for shorts back down to this bigger area right here, right? This bigger area right over here. So with that being said, there's kind of a couple things here. There's two setups. This, I would say, is probably, I would say this is a cleaner setup than the one I took in the morning, in my opinion, just based on where it was trading to. You had more prominent structure. I would say, I say prominent because it's more recent structure rather than previous structure. You're kind of anchoring off of for a depiction. Not that that really matters, but I do favor recent structure far more. So if we look at this, right, we're anticipating price to what? Trade back to this area before it wants to attempt to put a new high, which we see it fails to do, right? Higher time frame wise, right? High, low, high up here, right? So we're anticipating the market to want to trade back into this area, rebalance it, and deliver higher. So if we go up to the 5 minute chart, what do we see right over here, right? Beautiful 5 minute CSS in QS formation, right? Immediate close, or actually it took an extra candle, right? But rather quick close, right? And if we look at this similar to the one over here, up in this area, what do we see? 5 minute low, close below. We already know this is going to be a validated area on a lower time frame, right? And at that same point, what are we expecting price to do? Price to trade back to where, right? Back to this area right over here, this pocket of price. So with that established, right, if we get some projections off this, kind of a couple things I want to note that I don't think I spoke about in these videos, right? Always make sure you have something unmitigated to target for an exit. If you don't, in my opinion, probabilities down the drain. Always, always look for either an exit at the area where you're anticipating a possible bounce, Or if it's just slightly above, that's perfectly fine, which in this case, the 101 off of the CSS would have been, right? We can see this -1 deviation right over here at 21,185 is just slightly above here. So this gives you kind of a little bit more conviction, right? Because we have that 30 resting up here and we have that 50 here. So if we go down to a lower time frame, you can see it's anchored off this high to this low right over here. If we get onto the 5-minute chart, what do we see, right? See a relative balanced price range, so I'm not expecting too deep of mitigation. Usually these are the ones where we tap the 50. Like you can see right over here, tap the 50, don't go too far beyond, rarely get a body close up above, and we get that slower grind and that final flush down here, right? And I would have been taking, if I was doing a sell stop here, I would have been taking my sell stop right here, right? And targeting that 101 or this unmitigated area resting right down here, right? Now, understanding that where this was trading to, if we go back up to the 5-minute chart, what do we see, right? If we zoom in, right, higher time frame or validated time frame, what do we have? We have our zone right here, right? More importantly, this very sensitive area is going to be resting where, right? It's going to be the SNDR. What do we see right here, right? We see a 5-minute CSS, last down move before the close up above. This is what I'm going to be anchoring off of or anticipating something possible to come out of, right? Just as I talked about a moment ago, right? If we validate our areas, we already know we get a high closed up above here. And something specifically I like doing now with these validated CSSs for like kind of lower time frame zones or just area of interest, I just like leaving it on there. I don't like adjusting it anymore up to like this high. Usually this is going to be a little bit more accurate of an area. High time frame is king, right? And that's something specific I like to use for that. So if we go down to 1 minute, kind of a couple things you could have done here, right? You could have taken the 101 off of this, just a pure zone play right here. Or if you're wanting to wait for extra confirmation, right? And this is a good example of what I was saying a moment ago or earlier about the safer play, right? So you can see right here, let me delete this right over here. You can see, right, we get that 30% mitigation, right? And if you're trailing your stop, and this is why I kind of like letting it breathe a little bit until I see some at least momentum out of the area, and then I'll trail accordingly and cut risk. But until I see that continuation and strong push out of the area, I'm not going to want to tighten risk too much, because this is a perfect example of why, right? We see this tap, right, and we see some lethargicness in price, right? We have down bar, green bar, down bar, green bar, down bar, right? There's not much directional change right here. This is usually where you're going to get that stop run, and then we'll get that directional change, right? Just look at the comparison right here, right? Undecisive, consecutive, simple. This is when, probably with this strong green bar right here, this is when I would have trailed down to this low had I have taken this buy stop right here. And you can see this -1 off of this area gives a nice reaction, right? It reverts back down, and you can kind of just take off at these highs right over here, this unmitigated area right here. Simple, what I was talking about a moment ago. Always make sure you have something unmitigated to target, right? What do we see right up here, right? What does the market leave? This area is already mitigated. What's the market likely to gravitate to? The unmitigated area. Boom, right up here. Would have been a great exit over there. So I believe that was really all I wanted to talk about today. I feel like that's enough for one video. I don't want to say too much. But with that being said, I'm probably going to go ahead and wrap it up here. I will get this uploaded as soon as possible, and I hope you all have a blessed night. Peace.